good day, fellow South Africans and citizens of the world. And I'm continuously flummoxed by the naysayers who suggest that everything in South Africa is just fine. Everything is just fine and dandy. There's no increased crime. There's no problem with the South African police service. There are no farm murders. There are no farm attacks. There's no problem with Eskom. The municipalities aren't in the deep shit. Everything is just fine. And I've just touched the tip of a huge iceberg here. What are we talking about? We're talking about what the international investors are saying about South Africa when Moody's put the rand into junk. Now, let me tell you what is being said. Most analysts following South Africa expect it to lose its final investment grade rating, but they disagree over when that might happen and what the consequences would be. The gloomiest reckon it would trigger more than $10 billion of outflows and cause the rand to weaken to its lowest levels in more than 4 years. Others say investors have already priced in a downgrade and South African assets may even rise in the aftermath, especially if sentiment towards emerging markets stays strong. Moody's Investor Services, which rates South Africa Baa3, now isn't that an interesting code for just above junk? One step above speculative grade, cuts its outlook to negative on the 1st of November. That followed Finance Minister Tito Mbowene's budget statement, which showed the government's financial situation had deteriorated rapidly. South Africa is easily the highest bond yields of the 14 WGBI members. Now, let me show you that. If Moody's does downgrade South Africa, rand bonds will be excluded from the FTSE World Government Bond Indexes, which you've just seen, which comprises 14 currencies including the dollar and the yen, and have about $3 trillion tracking them. According to Bank of New York Mellon, South Africa has a 0.45% weighting in the main index. Foreign investors own 37%, that's over a third, or about 780 billion rand, or 53 billion US dollars of South Africa's local currency bonds, according to National Treasury data. Here's what analysts say the impact on going to junk would be. Bank of America. The US lender expects a rating downgrade soon after February's budget review, doubting President Cyril Ramaphosa's administration will manage to address concerns about a widening fiscal gap or debt-laden state power company, i.e. Eskom Holdings, SOC Limited, by then. But analyst David Horner and Jurie Jerick say markets have priced this in and outflows may only reach $1.5 billion. Especially if China and the US continue to buoy emerging markets by reducing tensions over trade. South African assets are cheap, and post-downgrade, the market is likely to rise as uncertainty declines, they said in a note this month. Bank of New York Mellon. Daniel Tenersgazer, head of market strategies, is in the bearish camp and forecasts between 8 billion and 12 billion US dollars of outflows if South Africa exits the WGBI, i.e. it's pushed down to junk. Its status as the highest yielding country in the index may not help much to curb the selling, he said. Rand bond rates averaged 9.2%, about 360 basis points more than those for the second highest yielding currency, i.e. the Mexican peso. Citigroup. A downgrade around March is possible if South Africa fails to come up with a credible debt stabilization strategy, which will involve tough negotiations between the government and unions about reining in spending, according to Gina Schumann, an economist at the Wall Street Bank. Moody's tolerance appears low, she said in a November the 4th note to clients, adding that a WGBI exclusion would probably lead to between $6 billion and $7 billion of capital exiting the country. Intellidex. South Africa's chances of avoiding a downgrade after the February budget are 50-50, said Peter Attard-Montalto, the London-based head of capital markets research. A cut has been priced in to a moderate degree and could result in a $5 billion of outflows, he said. Now, I just want to make a comment about the suggestion that the government will actually sort out their situation. On the Lovely Life 2019 channel, I had a video that I put up last night, and in there you've got that trade union movement that's so tied up with the ANC, Cosetu, saying there's no way we're going to have people being retrenched or lowering their salaries. So that's not going to happen because they're part of the team. Okay, so let's get back to this. Intellidex. South Africa's chances of avoiding a downgrade after the February budget are 50-50, said Peter Attard-Montalto, the London-based head of capital research markets. A cut has been priced in to a moderate degree and could result in $5 billion of outflows, he said. Investec. Annabelle Bishop, the bank's Johannesburg-based chief economist, said a negative outlook rather than a ratings watch means Moody's will probably give South Africa as long as 18 months to improve its finances. The government's 10-year local currency yields may rise to about 10% if there's a downgrade, but they probably won't climb as much as those in Brazil and Turkey did when they were cut to junk, she said. Now, okay, so 10% interest that the South African government's going to be paying on all this money that it's loaned from overseas. 10%. There's not the tax base there to support that. Rand Merchant Bank. Moody's really marked South Africa down because of our politics, Kim Silberman, a fixed income analyst at the Johannesburg-based investment bank, said in a video for clients on the 4th of November. She thinks a downgrade by March is now quite possible, and the rand would probably drop to 16 per dollar, 8% weaker than its current rate, and a level not reached since 2016. Adrian Shellinus, a bond trader at RMB, said outflows could amount to anything between 30 billion rand and 200 billion rand. That's about $15 billion. One thing is that this global environment is probably the most ideal for a downgrade to happen in, he said. And Standard Chartered Bank said, we do not see a downgrade as early as March as being likely at all, said Razia Khan, the bank's London-based chief economist for Africa and the Middle East. The negative outlook from Moody's provides the authorities with exactly the political cover they might need to take a firm stance on reforms, and a pickup in growth next year may mean a cut avoided altogether, she said. Even if it isn't, estimated of outflows of about $10 billion look significantly overstated, said Samir Gadio, Standard Chartered's head of African strategy. So there you go. You've got differing points of view, but they all say that the rand is headed for junk. And that means that the impact on the government in paying the interest on those bonds is going to go through the roof. There's only one way they can recover that, and that's, well, actually two ways. One is they can either raise taxes, which is probable. The second way is they can cut Social Security, which is less likely because the ANC depend on those people to keep in power, don't they? All right, guys, please remember to subscribe to be kept informed. Ring the bell for the updates. Please like this video, please share this video, and above all, stay safe.